Guys, welcome back to my YouTube channel. On today's episode, I'll be showing you guys another smart money strategy that can turn you into a profitable trader. These are strategies that nobody will ever show you, or you may end up paying for it through your mentorship classes. Alright, do stay tuned because in this video I'm gonna take it step by step, bit by bit, to explain to you in a way that you will be able to understand and implement it. Now let's go to the chart. Okay, right now on this trade, I will call it a sweep of liquidity. Yeah, a sweep, a sweep of liquidity trading. Because whenever market tends to actually take out a liquidity, it actually give a very big momentum to the upside or to the downside, depending on which angle it takes out liquidity. Now, let me just, this is a rough sketch of what I'm about to teach you guys. One of, if not 100%, at least 70% win rate in my trading skills, because this actually plays out very, very well. Now, markets happens to be in a downtrend. This is in a downtrend, and of course, giving us a swing low, and give us a swinger here, and it didn't take out this recent swing low. Rather, it came up to give us a change of structure, or let's say a change of character. When market gave us a change of character here, now it now came down to give us a swing low to continue its uptrend, giving us giving us a break of structure, which confirmed that market has now turned into an uptrend. Remember, this should be done on one time frame. This should be done on one time frame. If you are in 15 minutes, please stick to 15 minutes. If you're in 1 hour, stick to 1 hour. This hardly form in 4 hours time frame. Where you can see this kind of analysis is mostly 5 minutes, 15 minutes, and 1 hour. 5 minutes, 15 minutes, and 1 hour. These are the time frame that you can mostly see this more often, whereby price giving us a change of structure right here, which indicates that this is no longer a giant trend. We are now looking for a buy setup. And for this analysis to be complete, there are factors that you should look out for. Number one, there should be a break of structure, or should I say a change of character. This two can work. You can, whenever you see there should be a break of structure or a change of character, these two can work. Another one is a fair value gap, which people call imbalance. Fair value gap, FVG, which people do call imbalance. Okay, there should be a presence of imbalance within that push to the upside. Market should give us a very high momentum to the upside, giving us a change of character. This is where the imbalance should take place, not here, not here. The imbalance should take place at the the break of structure or the change of character, which means we are anticipating for a very big momentum to the upside. That is where you can actually get an imbalance and a fair value gap. And another factor that you should be looking at for here is an order block. Another block simply means the previous opposite candle before the the push, the opposite candle before the break of structure. So there should be an opposite candle here. That will how we will now map out, because this is a retracement. There should be an opposite candle right here. Oh, there should be a bearish candle right here that we can use to map out our other block. Then price now use the momentum to give us a change of character, or should I say a change of structure, anyone can call it, you're also correct, to retrace back, and price didn't mitigate this zone, creating inducement, liquidity. Now this is the another factor that we should look at for liquidity. if you call it liquidity, you're correct. If you call it inducement, you're correct. Now over here is our liquidity. Over here is our inducement. Price came down here. It didn't mitigate this zone. If price happens to come down here to pull up, this structure is no longer valid. If price comes down here to continue it up, this is no longer a valid structure. Rather, price came down here, it didn't touch it, then continue its uptrend, which validates that actually here is a very nice opportunity to set our buy setup. Now, giving us a break of structure, a double confirmation that we are now in an uptrend. This is a change of character, and this is a break of structure, a double confirmation that we are now in an uptrend. What we do is now is to come down to the fair value gap and the other block. Remember, the other block should be below the fair value gap, because the fair value gap and the other block is what will actually draw this market down. When market creates a fair value gap, it actually comes down to close it. All right. So we are now expecting the price should come back to mitigate this zone to pull out. And what will make price to give us a very high momentum is this liquidity here, this inducement. Okay, this is what will actually make price, after sweeping this liquidity to liquidity in trading is look like a fuel, because if you want to drive a car, you need the gas, you need the fuel. So in trading, liquidity sounds represent as fuel. Okay, when price comes down to this place, it will gather enough energy. Here is a demand zone, here is a sweep of liquidity and to the upside, which will actually give us a very high sweet setup. Now let me show you a simple live chart analysis on how it works. Now, as you can see, price was in the downtrend. Price was actually in a downtrend, and when coming up, this is when actually where price, this is a a pull up to the upside, and price didn't take out this low, which means that we are now in an uptrend. Price didn't take out this low, which now give us a change of character. This is our change of character here. Price actually gave us a change of character right here. As you can see, this is our change of character. And if you can see, price was actually creating us an inducement, creating liquidity, starting from here up to this upside. These are all liquidity. Knowing that this is a change of character, this is a confirmation that we are no longer expecting for a sell. We are not looking forward to buy. We are not looking forward to to get a buy setup. Now, as you can see, now first of all, this is our push to the upside. This is a very big momentum to the upside. That's one. Two, we look for our fair value gap. Where is our fair value gap? This is actually our fair value gap, because there is a space. There's actually a space between this and this. This is our fair value gap. There's actually a gap between this and this, which price will tend to close. This is our fair value gap. And where is our inducement? Of course, this is our inducement, because price failed to close this gap before pushing to the upside. This is not actually our inducement. After price didn't mitigate this zone, it actually comes back after giving us a change of character. Price will actually come back to mitigate this zone to continue its uptrend, and now map out this other block and fair value gap for my entry. Map out this other block and fair value gap for my entry. This is our liquidity. This is our liquidity. When price was creating, this is on a 1 hour time frame, which means that for a candle to form here, it will take 1 hour. indicating that there will be so many and a lot of stop losses placed right below here. There will be, if not millions, at least thousands of stop losses that will be placed right below here. And when price came down to take all of them out, it pushed up to the upside and giving me a sniper entry, giving me a sniper entry. And this is actually 1:2 risk reward ratio. A very nice trade at that. A very nice trade. And this is just simple analysis that can give you high probability setup. This analysis actually is one of my best so far. Is actually one of my best so far because price tends to respect it very well. If not for 100, at least 70, because I won't take 100. Nothing is 100% in this field. Nothing is 100% in trading. All right. Now, one marvelous thing about this that it works on all platforms. It works on crypto. It works on forex. It works on stocks. Actually hit this the same analysis on indices. Yes, I actually entered this trade. I actually entered a trade using this same strategy. Let me show you guys. I actually did it here. This is Nax 100. Now, as you can see, let me go to the 4 hours time frame so that you can understand this very much clearly. Was obviously on a downtrend. Price obviously on a downtrend. And when price came up, price now gave me a change of character over here. This was this was my change of character. This was my change of character. This was my change of character, indicating that I'm now looking for buy. I'm no longer looking for a sell. Price have given me that buyers have taken charge of this pair. All right. What I do, I don't normally take my analysis on a 4 hours time frame. I go down to 1 hour. 1 hour is as well as my key moments. Now, as you can see, market left a very big fair value gap here. Market left a very big fair value gap here. And if you check this, where when market now give us the change of character, which means that here is still a virgin. It haven't actually take out this zone. Market haven't mitigate this zone, and it was a very nice setup, a very nice setup for an entry. All right. It was actually a very nice setup for a buy. Price continued to give move higher low, higher low. I was waiting for it to actually comes down to my entry. I was actually waiting for it to come down to my entry, and which here it happens to be our liquidity. As you can see, all these things are complete. Number one, there should be a change of character or a change of structure. BOS, this should work. This is our change of character, and this is our change of structure. Change of character, change of structure. This is our inducement, liquidity. This is our fair value gap, and this is our order block. Price will actually must come down to mitigate this zone to continue its up move. It's a must. As you can see, when price actually came down, it also gave me a sniper entry. Like I told you, this is one of my best trading strategy that have been giving me my high win rates. It hardly give me a drawdown. It hardly give me a drawdown. It always end up giving me sniper interest. Sniper interest, quite all right. Now, this is how I was able to get 1:4 risk to reward ratio on this. This is just as easy as it is. Okay, very easy to achieve, and that is all that I have to teach you on this. Please do well to learn, practice, then execute. That's how to learn. Learn, practice, and execute. If you want to be a profitable trader, don't just learn and memorize. There's nothing to cram. There's nothing to cram in trading. This is not a university or now academic excellence, whereby you prove yourself by practicing. You learn, you practice, and execute. I recommended that you should practice with a demo account, because that's how too I did my own too. Practice with a demo account. A demo account will help you to feel free and actually get rid of fears. Once demo account, once you're able to get a good returns using demo account, then you might implement it into a real trading account. Right? All right, that's just all for now. This is the end of today's class, and I believe that you really learned a lot from it. Please do well to like, subscribe, so that this video can be also be recommended to those that actually need it, just that it just like it was recommended to you. Please do well to come watch the episode 3, because I will also drop another powerful strategy that can turn you into a profitable trader in no time. See ya. Bye.